Hey, what's good, self-direct investors? I hope you're all doing great, and I want to welcome you back to my channel. If you're new here, my name is Jordan. I'm the mind behind Make More Capital, and today we're coming at you with the Friday update. Now, before we jump in, if you enjoyed this video or you learned something, please just leave a like on it, as it really helps out my channel. And then, of course, if you want to learn how to take advantage of this generational investment opportunity, subscribe below so that you don't miss any future videos, but then there's plenty of content for you to go back, rewatch, and educate yourself with. I've tried to put all the news and facts in one place so that you can watch episodes over time to learn about the evolution of the industry, identify top players that you keep seeing pop up, and take advantage whenever you feel ready. Now, I wanted to start with this thread from SammyJ, as most of us retail investors have no idea what caused that end of day spike yesterday, especially from Canadian LPs. So I just wanted to share his thoughts, as it was sort of the most thorough thing I could find on Twitter. So Sammy remarks, for those confused about the price action at the end of day, more act news set off trading algorithms, buy programs, and short covering, all cannabis starts moving up. And that's likely mostly for the Canadian LPs trading on the major exchanges. That's why that happens automatically. While shortly after, the New Jersey delay circulates, pushes select MSOs with New Jersey exposure down, weighs on the entire ETF basket as sum of parts, and that is the reason for the MSO price being a bit different from the Canadian LPs. Now, number two, MSOs with no New Jersey exposure stay up. Truly, for example, as fundamental New Jersey selling also has a balloon effect, while non-New Jersey tier 3s and tier 2s end up moving up as a byproduct of that, while money enters Canadian LPs as a proxy to US reform, because obviously money can easily enter the LPs that trade on major exchanges, like on past news, while MSOS has huge buy volume and surge offset by the New Jersey delay news selling. While lastly, it seems like Acreage and CGC got a bit of a prop, as they are a proxy to New Jersey news through Canopy and through Canada. And so lastly, take a deep breath, everyone. MSOs lagging LPs for short periods is all due to structural issues. Roles will reverse once access to capital entering opens up upon reform. For what it's worth, the LP drawdowns have been greater than MSO drawdowns off the all-time highs, and fundamentals do still matter in the long term, which is again why I do think the MSOs are better value plays, and that's why most of my capital is still in MSOs. And if you trade, LPs can pay. And so while I'm not a trader, I just wanted to share that, as that is some insight as to what happened at the end of day yesterday, what we can see today, and then what we'll go into next week with some other news. But yes, just to recap, sadly, there were further delays from New Jersey, and I think everyone is just at their wits' end with this ridiculousness, but I wanted to share this from MJ Stock Trader, as New Jersey Cannabis Regulatory Commission now has a special meeting scheduled for April 11th, and this was not on their schedule previously. Their next meeting after yesterday would have been May 24th. But I do think it's ultimately a positive takeaway, because the continued incompetence that we saw yesterday is starting to piss the right people off, as the Senate President Nicholas Scutari, the architect behind both the state's medical and adult rec bills, was incensed over the CRC's latest delay, saying, quote, "Totally unacceptable. The Senate is weighing its options with regards to oversight." And so it is positive to hear this, and for that reason, it does lead us to believe that they are going to launch adult use on April 11th, because obviously they're starting to push certain people's buttons that the CRC didn't want to previously push. And so in some other news that we did get as well from Marijuana Moment, as the federal cannabis legalization bill is officially scheduled for House floor vote next week, and that will be the MORE Act, and it will die in the Senate, but this is likely what has added to the price increase that we did end up seeing. And so just to add, now House leaders have officially placed the cannabis legislation on a list of bills they plan to take up on the House floor next week. The Rules Committee will officially take up the measure in a meeting on Monday afternoon to prepare it for floor action, including by determining which amendments would be allowed to advance for consideration. So we do have a vote scheduled for Monday on the MORE Act, and so that'll hopefully bring some buzz around cannabis again and force Congress to consider acting. And the good news is we actually saw Congress do something yesterday, as Marijuana Moment also reported. In the same day, while all of this was happening, the U.S. Senate unanimously approves a cannabis reform bill on the same day that the House schedules a legalization vote. And while we would have just rather the plant just be descheduled, which then makes it not illegal, and that really would solve a lot of domestic issues in the U.S. We'll take what we can get. As this bill, the Cannabidiol and Cannabis Research Expansion Act, it cleared the full chamber unanimously without a debate, and this bill would streamline the application process for researchers who want to study the plant and to encourage the FDA to develop cannabis-derived medicines. And would also clarify that physicians are allowed to discuss the risks and benefits of cannabis with patients, and require the U.S. Department of Health and Human Services to submit a report on those potential health benefits, as well as on barriers to cannabis research and how to overcome those obstacles. And while this sounds like progress and will likely be perceived well in the press and public, I think the reality is that many doctors do not know the first thing about cannabis, and there's no incentive for them to promote the benefits of cannabis when a lot of them are incentivized to push pharmaceuticals still. And so while this sounds good, I don't know how it's going to change a whole lot on the ground. in the short term. However, I do like to see the momentum adding, and obviously the press is good for the awareness of incrementally reforming this plant eventually, which is our end goal. So just wanted to share this nonetheless. And so lastly, before we get into the companies, just wanted to share this from MJ Biz Daily, as this is an old article from February 18th, 2022, but I missed this from last month. But Santiago Dunbar on Twitter shared something that made me find it again, so I just wanted to thank him for this. So minority cannabis companies need federal relief, advocates tells Congress. And so if we scroll down to the bottom, I just wanted to share this snippet here. According to Law 360, U.S. Rep. Ed Perlmutter, the primary sponsor of the Safe Banking Act, told reporters recently that he secured a commitment from House Speaker Nancy Pelosi that she'll support keeping the SAFE measure attached to a larger omnibus spending package, the America Competes Act, if the already approved House bill has to be reconciled with the Senate version. While this does sound promising, we do know that it's Chuck Schumer's call at the end of the day and not Nancy Pelosi's, but obviously it's better to have Nancy Pelosi back in the Safe Banking Act than not. Plus, the Dems do have to take up the America Competes Act at some point, and obviously for them, it's more beneficial to do that sooner than later and to get that bill passed. And so I just wanted to share this. And so lastly, just before we get into these two MSOs, Cresco and Columbia Care, I just wanted to share this from Matt Lemurs, who writes for MJ Biz Daily, highlighting the accumulated net losses by Canadian LPs, saying that they might be finally leveling off. But this is an update. But I just wanted to share this quickly to contrast the difference between the US MSOs and the Canadian LPs, especially in the difference between the management quality and the operational efficiencies, because to date, total losses equates to $12.7 billion. And I don't know if this is all the LPs in Canada or just the ones on this list. I didn't end up adding that up, but we can see that Aurora from the beginning has lost $4.3 billion. Canopy has lost $3.2 billion. Hexo has lost $1.6 billion. The old Tilray before the merger, $1.3 billion. Sundial, $755 million. Afria, $561 million. TGod, $472 million. Organogram, $277 million. Zenabis, $240 million. And then the new Tilray, $28.8 million. So now let's jump into the earnings from Cresco Labs as they announced their fourth quarter and full year 2021 results with record revenue, adjusted EBITDA, and operating cash flow. So we'll just jump in and cover some of the highlights. Fiscal year 2021 financial highlights include record revenue of $822 million, an increase of 73% year over year, with gross profit excluding fair value markup for acquired inventory of $430 million, or 52% of revenue, and up 104% year over year. Managing a record adjusted EBITDA of $194 million, an increase of 219% year over year, and ended the year with over $224 million of cash on hand. So if we look at the fourth quarter 2021 financial highlights, record fourth quarter revenue of $218 million, up 34% year over year, with record fourth quarter adjusted EBITDA of $57 million, or 26% of revenue, an increase of 90% year over year. While their wholesale revenue of $101 million maintained position as the number one seller of branded cannabis products in the US, with leading share in the flower, concentrates, and vape categories. Retail revenue increased 10% sequentially to $117 million, an average of $2.8 million per store, which I think is quite significant considering of how much less stores they've had than some of the other bigger MSOs, especially before this deal to merge with Columbia Care. While same store sales increased 28% year over year, 1% sequentially, while excluding California, revenue actually grew 6% sequentially. So that would actually put them at about $227 million for the quarter of revenue. But obviously this goes to show how much of a challenge California is with the illegal market there, and the lack of help that we're seeing from state lawmakers in reducing taxes to help the legal companies compete. But lastly, record cash flow from operations of $38 million for the fourth quarter. Not bad considering 280. But as a Cresco Lab shareholder, and with Cresco being my largest position, while I was expecting more quarter over quarter growth this quarter, especially from all the MSOs, when we do factor in Croptober and then the fact that California has been hell to deal with, but I do have to understand that these companies want to be in California and they need to fight through it now in order to get that as a primary revenue stream in the future. I understand that that's very important. So as long as I zoom out and try to look year over year as opposed to quarter over quarter, I'm still very happy with these earnings and with the deal that we'll get to in time. So just want to scroll down. You can pause to read though for the management commentary here, and as well for some more information on the balance sheet, liquidity, and other financial information, some of their social equity initiatives, and the capital markets and M&A activity. But let's scroll down to the numbers just to see what the comparison looks like year over year. And so comparing end of full year December 31, 2020 to December 31st, 2021, the revenue increased to $821 million, up from $476 million, while their cost of goods sold did increase to $415 million, up from $269 million, but they managed to keep a gross profit of $406 million, up from $206 million, increasing their gross profit margins from 49.5% from 43.4%. So we do love to see that. While their operating expenses did increase, but not a whole lot, $271 million, up from $195. However, the total operating expenses were significantly more than last last year, leaving them with a net loss of negative 217 million versus negative 23 million. But at this time last year, their Flora-Cal deal in California had not closed yet, and so the main reason why they had to write off 290 million is likely they paid a lot more than Flora-Cal than they had to, and for that reason, some of what they bought did not materialize, and so they have to write off some of the goodwill and some of the intangible assets. And so that is normal when you buy companies, but that is the main reason why Cresco has obviously spent a lot more this year than last year, because they realized to keep up as a tier 1, they had to aggressively expand and make certain purchases. And so if we look at this most recent quarter though, December 31st, 2021, they did bring in 217 million, and so without California, that would have been up to about 226, 227, while their cost of goods did not go up very much. It was relatively the same, 107.7 million up from 107.1 million, for a gross profit of 110 million this quarter, up from 108 million last quarter, but they did manage to keep their gross profit margins up to 50.5%, up from 50.3%, and so this has helped their year-over-year margins increase to 49.5%, up from 43.4%. And so in the long run, I think that will be important, but if we look at their operating expenses for this past quarter, 70.5 million up from 69.5, it didn't increase much, and then this included another impairment cost of 14.9 million. And again, as a company, you do have to write off these losses at some point, so I think it's better to do that now than do it in the future when we have that momentum at our backs. And so if we subtract total operating expenses from gross profit, they did manage a positive income from operations from this quarter of 15 million, but then subtracting other expenses, they have a total net loss in the quarter of negative 11.9 million. But again, comparable to the other Canadian LPs, I think that the US MSOs are in significantly better positions. Now, I did just want to jump down to this to highlight that their cash and cash equivalents, they've got 223 million in cash, with other current assets of 198 million. So while they do have a lot more current assets to cover their current liabilities, they do have a lot more current liabilities than their current cash position would be able to cover. And so while I do like to see that company has enough cash to pay that off, as I've covered in past videos, but it is what it is, and I'm already heavily invested, and while I'm down a lot, I'm certainly not selling, because I do believe Cresco has what it takes, and they're building the right brands to be one of the tier 1 leaders in time. And I also like that they are buying Columbia Care, and so let's go through this. As Columbia Care reports record fourth quarter and full year 2021 results, issues 2022 guidance under U.S. generally accepted accounting principles. As the company now reporting in U.S. GAAP, also presenting results this quarter with reference to 2021 IFRS guidance. So their full year 2021 U.S. GAAP results include record revenue of 460 million and record adjusted EBITDA of 58 million. While their record quarterly revenue of 139 million was an increase of 70% year over year and 5% sequentially, their full year 2021 combined revenue of 474 million and combined adjusted EBITDA of 85 million, both company records and in line with previously communicated IFRS guidance, while the company issues 2022 guidance that we'll get down to below. So just wanted to share this, as we're just going to stop here quickly, but you can pause to read the management commentary on the transaction with Cresco Labs. But just to highlight, let's look year over year and not care so much as quarter over quarter, because ultimately what we have here is now two companies combining to become a new entity to compete with the big Curaleaf, the big Trulieve, which combined with Harvest, the big Verano, which combined with Goodness Growth recently, and then Green Thumb Industries, which is large enough, but we can expect them to make some acquisitions going forward as well. So year-end December 31st, 2020, they did 179 million. Now in 2021 up to 460 million, representing an increase of 156 year over year. So that is excellent growth. Good job, Columbia Care, scrambling while you could and expanding that footprint, for a gross profit of 194 million, up from 62 last year, representing an increase of 212% year over year. And so with all that said and done, leaving them with a net loss of 146 million compared to 119 million last year, which I do think is still quite good, as Columbia Care has been aggressively expanding, buying companies and integrating them into their business in 2020, but also into 2021, leaving them with adjusted earnings before interest, taxes, depreciation, amortization of some accounting wizardry, which I don't fully understand now, but I hope to get to one day, of a positive 57.8 million, which is much better than the negative 19 million that they had last year. And so we're going to get to this down. I just wanted to pause here to recap their 2021 guidance and results, as they did manage just to reach them in the nick of time, 473 million, while the bottom line was 407. And while they aimed for 46% gross margins, they managed 45. Combined adjusted EBITDA as well, 85 million, they managed to just hit that. But again, keep in mind, had New Jersey launched 9 months ago, 6 months ago, these numbers would have been a lot better and it would have been a different story. And New Jersey could have launched if they didn't hire such incompetent commission members. So just wanted to highlight that, as that does make me more optimistic on Columbia Care as well, and they're just waiting on certain markets to jumpstart, but also just wanted to show their top 5 markets by revenue in Q4. Despite the losses that I imagine they suffered from California, that Cresco Labs and many other companies did, it's still one of their top markets by revenue. So that says a lot about that market there. Well, we got California, Massachusetts, Ohio, and Pennsylvania, while their top 5 markets by adjusted EBITDA in Q4 were Colorado, Maryland, Massachusetts, Pennsylvania, and Virginia. And so just wanted to share this as well. Their operational highlights for fourth quarter, you can pause to read as they are busy making partnerships and expanding. And then lastly, their operational highlights for full year 2021 and capital markets highlights, you can pause to read as well. But so we're just going to jump down to this 2022 outlook. So we'll start with this before we just go down to the numbers briefly. But if we look, their revenue for 2022 using US GAAP is $625 million to $675 million, while their expected adjusted EBITDA $120 million to $135 million. But keep this in mind, as Columbia Care's 2022 outlook assumes adult use sales begin in New Jersey in Q2 2022, but does not include any contribution from future acquisitions, nor does it assume any changes in the regulatory environment in markets where Columbia Care currently operates. And so I just wanted to provide this context because obviously without New Jersey launching, they're not going to hit this guidance, which is very annoying, and we can only blame that on New Jersey's incompetence. But thankfully, we've seen that extra meeting added, and it seems like the CRC is finally getting the shit that they should have gotten a long time ago, and this will help them potentially reach that guidance. But so if we just scroll down to take a look at their year-over-year numbers and to compare table 3, actually this one just does year-over-year comparison, so let's go down to table 6 and 7. That's mostly what I do want to show you, as this compares month over month. So we can look at their progress from December 31st to September 30th to June 30th and then to March 31st. And as we can see, their revenue has been increasing quarter over quarter, $139 million up from $132 million. And so this is less sequential growth than we would have thought, but that's up significantly from $102 million up from $86 million. But what I do notice is that their cost of sales is still steadily increasing and not reducing as much as I'd like, as they spend $82 million to make that $139 million, $70 million to make $132, $60 million to make $102, and then $52 to make $86 million. So they have kept gross profit, but that has gone down quarter over quarter. And so I think this is why they needed to come to a deal, because Columbia Care, obviously, they do look very cheap and they have a big footprint, but sadly they're losing more money than they'd like. And so this is why strategically it's probably best for them to come together, these two companies, especially at this time. And I do notice as well they have a goodwill impairment charge here. And so you actually have to go into their CEDAR filings and pull out their 10K and go through that. And so I actually do want to find out what Cresco Labs was and what Columbia Care's, what their impairment charges were, at least for this latest quarter. So I plan to do that on the weekend, but nonetheless, just wanted to highlight that as Columbia Care is not as healthy as I thought they were. And while I did still think that obviously if the trend were to change, if SAFE were to pass, getting them at a low valuation would allow you to buy low and then sell high in the future. It just does show that Columbia Care likely did need to merge, because the longer SAFE takes, they're not as cash healthy on their balance sheet as some of the other ones. And so while that's become more clear to me, it was actually table 6 that made it abundantly clear. As we take a look at their balance sheet and their cash position from year end after 2021, they've got $82 million in cash, but their total current assets are $226 million. And if we look at their total current liabilities though, $243 million. And ideally, when you look at a balance sheet, you want to see lots of cash and you want to see a lot more current assets than their current liabilities. So this tells me that they would have to sell some inventory in order to make more cash to pay this off. They might have to raise more money, but ultimately they could do all that. But for them, a deal to merge where they get paid out, and they're happy with it, and then they help another company compete, become the biggest with their assets, that makes more sense. And so that leads us to this deal. And so I do just want to add a little bit of insight and some thoughts on this deal, as both earnings for Columbia Care and Cresco Labs were weaker than expected, making the timing of this announcement very strategic. And I did listen to an interview that Boris gave with Advisor Shares on Wednesday, and he did say that this was not news to any insiders in the industry. It was well known from all the CEOs that this deal was going to happen, and so clearly this deal was to make up for the weaker than expected earnings. And it makes sense though, because I think it is the best way to compete with the other tier 1 MSOs, as it gives Cresco the retail presence that they've been lacking and allows them to compete long term with that wholesale advantage that they have. And then also just wanted to say that I'm pretty sure Cresco paid less for Columbia Care's assets than TrueLeaf paid for Harvest's assets, and Harvest didn't include any New York license, which I think can be very valuable in the long run. So I think Cresco got a better deal on Columbia Care than TrueLeaf actually got with Harvest. And obviously that's just my opinion, but I do think that is considerable. And then so lastly, Boris, in that interview with Advisor Shares, he did say that the overlap will force the new combined entity to divest some of their New York licenses. And even Boris said he might be a strategic buyer. And so while yes, at first glance, there's lots of overlap and this deal doesn't make a whole lot of sense, but a few New York licenses on their own in 6 to 9 months from now could help cover a large portion of that $2 billion cost. And so besides the equity dilution by buying these shares, by buying Columbia Care's outstanding shares, I think Charlie is thinking much bigger than I had even considered. And so for that reason, it is the right time to make the move, if there was any time, because I wasn't expecting them to make a move. And so with that, we're going to get into it. Cresco Labs to become the new leader in cannabis with the acquisition of Columbia Care. Transformational deal will combine the best-in-class wholesale, retail, and operations with an expanded strategic footprint in the largest and fastest growing market in cannabis. But keep in mind, this is still subject to close. And because of a lot of the overlap and whatnot, it's possible that this doesn't close, but obviously there's an incentive for both companies for it to. As they announced today, they've entered into a definitive arrangement agreement pursuant to which Cresco Labs will acquire all of the issued and outstanding shares of Columbia Care, subject to customary closing conditions and necessary regulatory approvals. The transaction is expected to close in the fourth quarter of 2022. And so, if you own Columbia Care shares, under the terms of the arrangement agreement, shareholders of Columbia Care will receive 0.557 of a subordinate voting share of Cresco Labs for each Columbia Care common share held, subject to the adjustment, representing total consideration enterprise value of approximately $2 billion based on the closing price of Cresco Labs shares on the Canadian Securities Exchange as of March 2022, representing an approximate 16% premium based on the closing prices of Columbia Care shares as of March 22nd. And I know Columbia Care shareholders, you should have gotten a better premium. You deserved a better premium, but sadly, when cash is hard to come by in the industry, it is what it is, and at least you've got a nice piece of the best wholesaler in the game. So key transaction highlights and benefits as we know it. And so again, these are the 3 points that they think will create for this new entity. And so first line though, take this with a grain of salt because every MSO claims this once they make their merger, but we know that only time will tell. So firstly though, they say superior market access, giving the new combined entity the largest multi-state operator by pro forma revenue, gives Cresco Labs the largest pro forma revenue in cannabis today at over $1.4 billion, but note a footnote that we'll check after. Strategic national footprint, over 130 retail stores across an 18 market footprint, representing the number 2 retail footprint in the industry and the number 1 retail footprint outside of Florida, as the combined company will cover all 10 of BDSA's top 10 markets and top 10 largest and fastest growing markets by 2025, representing approximately 55% of the US population and over 70% of the addressable cannabis market. And so just want to scroll down quickly to check what those footnotes were about. Number 1, number is before divestitures and based on Q4 2021 actual results or consensus estimates. So they could be using the estimates where actuals are not available or annualized. Well, number 2, the footprint includes 17 states and the District of Columbia. And so back to it, market share leader in key states. Independently, the companies currently have number 1 share positions in 4 markets: Illinois, Pennsylvania, Colorado, and Virginia, a number 2 share in Massachusetts, and a pathway to a top 3 position in 3 more: New York, New Jersey, and Florida, bringing the combined company to a material market position in 7 of the top 10 markets by revenue in 2025, according to BDSA, and exposure to adult use upside. The combined company will have a meaningful presence in today's most influential markets and those with the biggest tailwinds for growth and adult use upside, including New York, New Jersey, Virginia, which are all set to come online, Pennsylvania, Ohio, Maryland, and Florida. Proven capabilities in wholesale and retail. The industry's leading brand portfolio, number 1 market share in the US with strength in every major segment, number 1 in branded flower, number 1 in concentrates, and number 1 in vapes, and top 5 in edibles per BDSA number 3. And then most productive retail banner, Cresco Labs Sunnyside retail stores have averaged annualized revenue per store of over $11 million, the highest of any scaled national operator in the industry, while industry-leading wholesale platform, pro forma Q4 2021 wholesale revenue of over $120 million, the highest in the industry. And so lastly, for balanced economics, and I imagine this is the most important part, increased scale and diversification. On a pro forma basis, the company expects to have annualized revenues in excess of $100 million in 8 different states by 2023 as the combined company increases depth across other markets and diversifies its revenue base. While their improved revenue mix increases retail revenue mix to 65% of total from 47% today for Cresco standalone, increasing vertical integration and scale to drive profitability improvement. And for the long run, I think that's very important and good to get that out of the way now, as opportunity for synergies in delevering, ability to increase retail productivity, reduce redundant operational and capital expenses, as well as delever the organization through the proceeds from the sale of redundant licenses and assets in high volume markets. And so again, as I mentioned, that they're going to have too many licenses in New York so they can sell that. While at the same time, we know Cresco just got approved for, I think it was a 386,000 square foot facility in Wawarsing in New York. But then we know Columbia Care has bought a 1 million square foot facility in Long Island. So while they're not going to be able to sell that for as much as they might have bought, they might end up selling one. And so there's just a lot we don't know. And I imagine they've planned this out all out, the teams of Columbia Care and Cresco Labs, and it's just about them being able to execute and make this happen over the next 9 months. So we're just gonna have to wait and see if they can pull this off. And I believe in them, hope they can. So management commentary from both teams you can pause to read. And so lastly, obviously the terms of the transaction. Main thing to highlight is that the arrangement agreement provides for certain customary provisions, including covenants in respect of non-solicitations of alternative transactions, a right to match superior proposals, and a US $65 million termination fee payable to Cresco Labs. And so given that, it seems like Columbia Care has every incentive to try and make this integration as seamless as possible and make it happen under certain circumstances. And so that's most of the deal. Lastly, just let's go through the third footnote while we can. Cresco, as a standalone entity, holds #1 position in flower, vapes, and concentrates in whatever market they would have been referencing, I imagine. So that is it for the deal, though. What do you think about it? Let me know in the comments if you think this is a good deal or a bad deal and why. And so on to some other news. Just wanted to share some snippets from Todd Harrison as he shares Camilo on Cresco Labs from BTIG. So you can pause to read the whole thing as they highlight soft Q4 results with more choppiness expected in the first half of 2022, but the story turns to a formidable Columbia Care acquisition integration, maintains their buy with a 16 Canadian dollar price target. So you can pause to read, and then as well you can pause to read what's at the bottom. Otherwise, you can grab the link if you want. And so this is more bullish results, or I'd say more bullish feedback on the deal. Well, this is a more bearish one from Stifel, I believe. Yeah, Stifel Canada, the Greek freaks on Cresco Labs, downgrade to a hold. Canadian price target of 30 down to Canadian 8. And so I think this is a bit overdone, but nonetheless you can pause to read as to why they think that. And so lastly, I did want to share this as we haven't heard from Verano at all. We know Trulieve is going to be announcing their earnings on March 30th. And so CC Invest asked this question, any news on the Verano release for or Q4 results? And I just wanted to share this from 2Js covering what Verano said. I guess he asked their investor relations yesterday and he got this response. Hope to announce our date soon and understand we are behind the cadence of previous quarters. However, please keep in mind, as mentioned on our Q3 call, that we will be converting to generally accepted accounting principles for Q4 reporting. So just wanted to provide that update from Verano. They haven't announced a date yet, but they are aware and they will soon, I imagine. Wanted to share this one from Thomas Bolton. So thank you, Thomas, for making a summary of Boris Jordan's interview with Advisor Shares that he did on Wednesday, because I was going to try and pull the recording to share with you guys, but for some reason the recording is not there and we can't play it back, which really sucks. And for that reason, thank you, Thomas, for making a summary. And so you can grab the link below if you want to learn more about what Boris had to say. And his views have changed on a lot of things, but again, I don't think he really knows what's going to happen either. We just have to watch this thing unfold in regards to SAFE and what happens over the next few months, but I am excited. So lastly, just to end off with some humor, as the news from Shepard Smith and CNBC covering this great story, is the pot business is on the rise and some California nuns are rolling into the multi-billion-dollar industry. As Frank CNBC reports on the Sisters of the Valley who are hoping to convert non-believers, and in the meantime, I imagine they would just love to see safe banking pass to mitigate the risk.
A crop of nuns is worshiping not the Holy Spirit, but what one calls the holy plant. Cannabis, the marijuana business on the rise, and now even some California holy rollers are getting a piece of the multi-billion-dollar industry. According to the firm BDSA, Americans are projected to spend nearly $50 billion a year on cannabis products by the year 2026. That's nearly double U.S. sales right now. The Sisters of the Valley are rolling right along with it. They're hoping to convert a few non-believers along the way. Here's CNBC's Frank Holland.
They may look the part, but these nuns are not religious, at least not in the traditional sense.
I do say the words holy plant. Cannabis to me is holy.
Sister Sophia is one of 10 nuns whose devotion to the so-called holy plant has turned into a budding business here on this 1-acre farm in California's Central Valley.
Is always
I reached for something that could make profit, could make jobs, but would be honorable and allow for individual growth and individual freedom.
The founder of the Sisters of the Valley, Sister Kate, says they generate upwards of $1 million a year in sales, producing and selling CBD products from oils and soaps to their best-selling topical salve, which she claims can help with arthritis and joint pain, skin conditions, even migraines.
Because it's medicine.
I hope that in 20 years from now, there will be so much research that we really can't look away from this plant, and we're all calling it a holy plant eventually.
There's enough research already.
Their gospel of cannabis is spreading. The Enclave boasts tens of thousands of followers on Instagram and TikTok. And in an area plagued by some of the highest unemployment rates in the state of California, Sister Kate plans to grow the business, adding new product lines and recruiting others to join her mission.
It's important that people know that we're not just ditzy stoner nuns. And more the doctors are open to plant medicine, and they're very friendly towards what we're doing.
And
you go, sisters. And that is it for today's episode, folks. I want to thank you so much for tuning in, and I really hope you got some value out of it. What did you think of the stories mentioned? Let me know in the comments if you have any questions or suggestions, and I'd be happy to address them. But besides that, if you enjoyed this video and you learned something, please just leave a like on it. Subscribe below if you don't want to miss any future videos, and I will catch you on Sunday for This Week in Cannabis News. Have a great weekend, everybody.